very warm welcome to the brand new edition of To The Point. I'm Kriti Mishra. And on today's show, my guest is Mr. Sanjeev Sanyal, Principal Economic Advisor, Ministry of Finance, Government of India. Mr. Sanyal, welcome to Sabha Television and thank you so much for joining us through this virtual platform in this era of social distancing.
It's a pleasure to be here.
Well, let's talk about economy first of all. The Finance Ministry report for September says that India's COVID-19 caseload may have peaked in September. Is the worst over? Are we firmly on the path of economic recovery? How robust is our recovery?
Well, as far as the health numbers are concerned, they're there for all to see. The daily number of new infections has clearly peaked. And also the recoveries are doing well and they are exceeding the number of new cases. So the number of active cases are beginning to decline. Again, this is a purely statistical point and all of you can monitor it. As far as the economy is concerned, of course, we have in the last 1 month or so finally begun to see some data that is pointing towards the green shoots of a recovery. You may have all have read about it in the newspapers. We are beginning to see, for example, GST collections go back up to 95,000 crores for the month of September. They are, of course, the collections of monies collected in August, but nevertheless, in September is when they get registered. Similarly, we saw car sales pick up from almost most of the major car manufacturers, motorcycle manufacturers. We also saw, similarly, electricity consumption going higher than what it was in September last year. Rail freight is back. So there are numbers now that suggest that some of the demand in those sectors that have been opened up have come back. And there is also, interestingly, something called the Purchasing Managers Index, which is the intentions of making new purchases, which is coming from manufacturing sector, which shows that those the purchasing managers of major companies have plans of making major purchases into the next few months. Again, it's a forward-looking indicator of demand. So overall, in those parts of the economy that have opened up, we are seeing demand coming back. Now, of course, there are sections of the economy that are still closed in September and are only now getting opened up, like in the services sector. So it is not the case that we are back to normal, but it is a good sign to suggest that wherever we have opened things up, demand seems to have come back. So, fingers crossed, but it does suggest that perhaps the most pessimistic forecasts are not going to bear out.
Well, Mr. Sanyal, one would agree that economic indicators allude to recovery in various sectors. Now, Government of India has said that phased unlocking has helped this. But we saw staggered lockdowns in various states. Do you think that was a major roadblock?
Well, of course, there is a trade-off between the economic and the health requirements. If I was purely thinking from an economic perspective, I would say just go and open everything up. But of course, I have to take into account that this is still a living pandemic. And while we have become much better about dealing with it, and the death rates in India, thankfully, have remained well managed, it is not the case that we have, we are out of the woods completely. So where possible, we have opened things up in a phased manner. But, wherever we find that there is a hotspot, I think the local governments, the state governments have to take a call of what has to be done. And there is a price we pay for it. There's no point denying that. But then, these are the trade-offs that have to be made.
Well, absolutely. And as we are heading into the festive season, usually during festive season, we see hike in consumption. Given this uncharted territory, what is your assessment now?
Well, it's obviously something that we will have to see how it pans out. But my own sense is that at least for things that are, say, manufactured goods and things like that, we will see demand to some extent come back. They've already come back, as you saw, for automobiles and so on. So you will see some degree of sales coming back. But the fact is that many of these festivals will have to be held under very controlled situations. So the Dussehra gatherings, the Durga Puja gatherings and so on will have all kinds of restrictions on them. So they will not be normal circumstances. So Similarly, we are opening up, for example, the movie theaters, malls, etc. Now, there are still restrictions on them. We just have a standard operating procedure which is being put in place, which allows a certain kind of opening up. So this is not back to normal, but yes, compared to a situation of full lockdown, it will show a return of some amount of demand. Now, this is not to suggest that going forward we don't need to see things pan things up. But yes, I mean, with every step as we open things up, I think demand has come back to some extent, and we expect that to happen even in the services sector.
Well, experts have also pointed out that can we think of demand side intervention?
Well, many people have talked about demand side interventions, and yes, some demand intervention is necessary. But let me also say that we have, unlike many other countries, taken a more cautious approach, because we also instituted one of the toughest lockdowns in the world. And that meant that if we did pump up demand very aggressively, say in April, May, June, then what would be the use of it? Because there's no point in pressing the accelerator when your foot is firmly on the brake. But now, as we have taken our foot off the brake, we are now in a position to press the accelerator in certain areas. For example, in spending on infrastructure projects and speeding up their completion. And we have made it very clear, both from the Prime Minister and the Finance Minister, that where infrastructure projects can be sped up and there's financial resources needed for it, we will make sure those financial resources are made available. Now, it doesn't mean that there doesn't continue to be certain kinds of areas where there are still restrictions. So where there are no restrictions, yes, demand should indeed be accelerated, and both monetary and fiscal measures will be provided.
So you said monetary and fiscal measures. Of course, infrastructure has been the fulcrum of this government. So what are the other ways in which we can spur demand?
So obviously the easiest way to do it is through infrastructure. But of course, there are other ways. For example, removing regulatory restrictions which may not be appropriate for this time. There are certain areas, for example, like we have allowed for forbearance of various kinds, allowed for restructuring of various kinds by the banks, all of which means that, the big danger that everybody is afraid of is that as a result of this shock, you will end up with a cascade of defaults which ends up jamming up the financial system. So we have worked very hard to make sure that jamming up and that cascade of defaults, the sort of jamming up of payment systems, all of that does not happen. So that is the context in which you need to look at the 100% guarantee that the government provided to the MSMEs, the window we have now provided for allowing the banks to restructure without, taking on the NPA label. All of these are attempts to make sure that things do not get jammed up. Same thing, we have kept aside the IBC process for a while for those cases that appeared during this phase. Now, this is not to suggest that we have removed the logic of IBC or the framework has been dismantled. Not at all. Insolvency and bankruptcy is a very important reform that this government had introduced, and it remains the framework that will remain in place into the future. But we recognize that there may be a case for holding it, putting it on hold for those cases where there are perfectly good companies that just happen to face a shock, an extraneous shock because of COVID, and have consequently had certain problems. And I think it's fair that in those cases, we do provide a certain amount of leeway.
But now there are also concerns about the moratorium plan rollout.
No. So obviously there is the moratorium plan, but let that pan out. As I said, a window has been provided for allowing the banks to, in various ways, do a one-time restructuring. And we encourage the banks, and we have had good feedback from the banks and from industry saying that many people are taking advantage of this.
So, as you said that this is an extraneous shock, what would be the impact of this shock on the banking landscape of India?
Well, it's obvious what the shock is. I mean, when a large part of the economy is essentially locked down, that causes all kinds of problems in terms of there are companies that are perfectly good companies and otherwise keeping up with their debt payments are suddenly can't find that they can't pay up. Now we have to make arrangements for them. We did provide a moratorium for a while, but now we are moving on to the phase where simply extending the moratorium infinitely will not help. They need a one-time restructuring so that we can get on with new lending. We can get on with new infrastructure building, get on with new investment. So all of that requires that we put this behind us as quickly as possible and get back to business as usual. Because without that, you have a circular problem in that the economy doesn't get going, lending cannot happen, and everybody is locked into this vicious cycle. So we have to get past this vicious cycle and do it as fast as possible. That is the context in which we are unlocking systematically, but where we can, we are doing it. Now, of course, there are some sectors which have special problems. For example, hospitality and travel. Here, even if we removed all the restrictions, it is not the case that people are going to suddenly go back to going on holidays, or foreign tourists are going to return immediately just because we have removed restrictions. So there are sectors where the pandemic effect will be there even after we have removed all these, done all the unlocking. So for all of these reasons, we have to again handhold some of them even past all of this restructuring, unlocking, and so on. So all of these ultimately have a bearing on the banking system and the financial system.
Well, absolutely. That's a very pertinent point that you're making. But there's another narrative, Mr. Sanyal, that we need another stimulus package. Would you agree?
Well, where appropriate, we should provide it. As I said, we were very conservative about pumping demand at a time when we were entirely under lockdown. And so during the lockdown phase, our emphasis was more towards not reflating demand, which we thought was not efficient to do. Our emphasis was in providing a cushion and a safety net to those who are vulnerable, whether it's the very poorest people or to those businesses that were particularly vulnerable, like the MSMEs. So that is the context in which monies were transferred to Jan-Dhan accounts. That's the context when food was made available. That's the context in which various deadlines for the financial reporting, etc., were pushed back. That is the context in which we also did that 100% guarantee for loans for MSMEs up to 3 lakh crores. All of that is that context. Now we are in another context where we have unlocked. The foot has been taken off the brake. Yes, you're right. There is a case for now pressing the accelerator on demand. And I think both the finance minister and the prime minister have hinted that, where appropriate, we will provide that support. And I just told you a little while ago that a key way in which this demand acceleration will be provided will be through the infrastructure projects. Infrastructure build-out of an existing pipeline with spade-ready infrastructure projects will be pushed forward.
Well, I agree that the government has reiterated that it is open to all the options. But given the situation, does fiscal deficit target or the borrowing target worry you?
Well, obviously, in a situation like this, we will have to allow for the fact that the fiscal target is not going to be what was there in the budget in February. I mean, even if we did no excess spending, the deficit will be larger because revenues have declined. You are also going to see, of course, the fact that there were a lot of extraneous spending that we had to do for dealing with the health situation and for this safety net that we had to spend. So yes, there will be a fiscal deficit will be somewhat larger than would have otherwise been in a normal year. But we have also made it adequately clear that where we need to spend on capital expenditure, there will be no cutting back at all. In fact, if we feel that there is space somewhere, certain projects where we can speed things up, we are willing to provide the financial resources for doing that.
So are we ready to witness V-shaped recovery?
Well, you can choose the alphabet you wish, but the fact is, I think you will see that in the quarter just ended, the September end quarter, I think the number will be substantially better than the ones for the previous quarter for GDP growth. It will probably still be negative because there was still, a substantial part of the economy was in lockdown even in that quarter. But it will be a relatively smaller decline. And I think in the quarter that we have just entered, you will see growth probably, the growth rate will probably suggest something, economic activity, not too far from what was there last year. And then in the following quarter, you will probably maybe even see a positive number. But I'm quite confident that you will see a very large positive number for the quarter of April, May, June of 2021. This will be, of course, it will benefit from the lower base, but I think you will see a lot of lagged impact of the measures we have taken really begin to bear fruit by. So it's not too far away, less than 6 months. So you will begin to see a significant growth acceleration, certainly in the next 6 months.
All right, we do hope for that. But let's talk about Atmanirbhar Bharat package. How do you view its success, or how do you view its progress today?
I think the Atmanirbhar Bharat is an economic model. It's not about demand management at this point in time. Atmanirbhar Bharat is a framework of thinking. It's about looking at resilience, particularly leveraging our internal resources for making ourselves self-reliant. And I have emphasized this many times. This is not a return in any way. The idea here is that we take a pragmatic view about making sure that our economic policies are able to be run in a way that serves national interests and not hostage to some economic model that we may read in textbooks. So I'll give you one example. We kept out of RCEP for a variety of reasons because we didn't think that it was going to serve our purposes. Now, this is not to suggest that we have some ideological view that we should not trade with the rest of the world. Far from it. We are quite happy to go and do a trade deal with somebody else. And we may indeed pursue those trade deals quite aggressively in other places. So the idea here is to look at what serves the national purpose and take it forward. The exact same thing is true even with where we want to provide protection for certain strategic sectors. We may do that. So we will provide certain amount of protection for these pharmaceutical companies so that they can protect their supply chains for those inputs, the critical inputs. But that is not to suggest that we are going to not compete in the rest of the world. We are turning into import substitution. Not at all. We, in fact, want the rest of the world supply chains to move to India. We want foreign companies to come here. We want FDI. We want Indian companies to compete abroad. So this is not a move at all to an import substitution model. This is very much about remaining engaged with the rest of the world. So Atmanirbharta is not about import substitution or some sort of a withdrawal from globalization. Not at all.
Again, that's a very valid point that you're making, but I'd like to elicit your view on manufacturing capabilities in India. Now, manufacturing has long been Achilles' heel for Indian economy. How do we expand our capacities now? Particularly in the capital-intensive centers.
So there are many small parts here. So if you'll have to allow me to elaborate. One part of it is, of course, we have to modernize our regulatory framework because otherwise we're not going to make any. So that is the context in which you need to see the various labor law reforms that we have just done. Agribusiness, for example, is not possible until we have modernized agricultural trade. So that is again an area where we have liberalized agricultural trade and so on and so forth. So there on the regulatory front, if you see, we are easing things up. About a year ago, we had also substantially lowered corporate tax rates, if you will remember. So what we are doing is creating a business-friendly environment where investment can be made. Same thing has to be done with our physical infrastructure. So our physical infrastructure has to be upgraded. And that is, of course, ties in with the fact that we need cheaper cost of capital. That, of course, has happened partly due to the shock. And one of the benefits of having this big shock is globally cost of capital has crashed. So while India has also seen a decline in the cost of capital, our cost of capital is higher than that of the rest of the world. And there is scope, I would argue, to lower it in India as well. And that there is a discussion here on the transmission of monetary policy that we need to have. But again, an important area that we need to do. And the third area is that ease of doing business in terms of connecting through to global supply chains. Now here we have an opportunity because global supply chains for geopolitical and other reasons are liquefying themselves. But then we have to actively go and market ourselves and grab that opportunity. It will not come to us. So all of these issues are there. But manufacturing is an opportunity. We have to recognize it and go out and grab it.
Well, absolutely. And talking quickly about the important bills that were passed in the last monsoon session of Parliament. First, let's talk about the labour codes. How would they ensure that the welfare of labourers, that is also being taken care of? And also there's enhanced ease of doing business in India.
So actually what we had earlier was a bewildering network of laws. Nobody was very clear what it was. There was a huge amount of self-contradiction. Many of the laws relating to safety and so on were outdated and didn't make any sense in the 21st century. And of course, there were very complicated rules related to how the employment contracts would be set up between employer and employee. All of that has now been codified into 4 sets of clear laws, at least at the central level. So all those 44 laws, etc., have been now, the internal contradictions have been worked out and they have been now modernized. So on one hand, we have actually enhanced safety and working condition rules so that they are now 21st century level. At the same time, we have allowed for flexibility. After all, if you're going to compete in a rapidly changing world where new industries are emerging, industry practices are changing, and so on, you need to be able to adapt to it. And that requires flexibility. And we have to accept that and be able to have a worker-employer relationship that allows for adaptation to new circumstances. So all of that has now been incorporated into these new laws at the central level. Now, of course, at the state level, different states are doing different things, and you have seen in states like UP, etc., they have moved on and adapted their laws even there.
Before we end this conversation, I'd quickly like to touch upon the farm bills or the farm acts that they've become after President's assent. How will they transform the agricultural space of Indian economy?
So as the Prime Minister and the Finance Minister have been emphasizing, we had a strange system where essentially the farmers were told what they can sell, where they have to sell it, and at what price they have to sell it. Then those who are buying those products were told you can store so much and only so much, and so on and so forth. And if you store more than that, you will actually be raided and called a hoarder. So you had a bizarre system that was completely outdated. I mean, when these systems were put in place in the 1950s, maybe they made sense. I could even dispute that. But certainly in the 21st century, it made no sense to have a system like this. After all, do you tell manufacturers of cars or soaps or any other product that, look, you shall go to a particular marketplace where you shall sell it at this price and so much quantity and so on? You don't do that. So why do you want the poor farmer to do this? Let the farmer have choice. It's not like we have shut down the old system. The old system is still there. Let that old system compete. If it happens to be an efficient system, then it's still available. But why should you not provide more choice? Similarly, last year, something like 76,000 raids had been done on people in the name of APMC and Essential Commodities Act. 76,000 raids, of which only 3% or 4% stood up in courts of law. That means 96% of them were just pure harassment. And incidentally, after doing all of that, we were not able to stabilize commodity prices as well. Onion prices every year go up and down. So obviously, this was not the way to do it. Countries like Dubai, which don't grow onions, don't have spiking onion prices every year. Why not? So obviously, this is the way we were doing it is not the way to do it. What we need to do is to have a supply chain. And that supply chain, nobody can invest in, because if anybody invested in it, that person will be called a hoarder by the system and get raided. So we had to dismantle this exploitative system. And, we have done so.
Well, absolutely. So it's about more choices and ending the monopoly. That's what Mr. Sanyal is saying. Mr. Sanyal, thank you so much for joining us and sharing those details with us and that perspective with us. Thank you so much.